So, hi Rachel, thanks so much for having me on your show today, and would love to share a little bit about Dryrun and a little bit about myself. My name is Blaine Bertsch. I'm co-founder and CEO at Dryrun Cash Flow Forecasting Software. And just to give you a little bit of background where Dryrun comes from, I had a creative agency for over a decade. AR, AP, timing of invoices and bills, overdue invoices and bills were always a challenge. And just that experience of having that sort of stress on from a financial perspective on our business led me to come up with the idea for Dryrun. And so as I walk through the demo of Dryrun, I think you'll see that even though we serve a wide range of businesses today, and there's a lot of different ways you can approach forecasts in Dryrun, we still work with a lot of companies that have that high level of volatility, generally coming from the same sort of problem: big bills, big invoices, timing issues. And so we give the users an ability to stay on top of those ARAP invoices and bills on a week-to-week basis, but also kind of get a little bit higher above it and get a bit of an idea from a bigger picture and a hybrid perspective what the revenue is going to look like in more of the midterm as well. So we can kind of give a little bit of an idea what's happening there. So here's right now we're actually in a Dryrun forecast. Right now we're looking at just a single scenario, and we're looking at the cash end view. So this is kind of the highest level you would generally see in Dryrun. We always like to have a really simple at a glance view for management teams to understand what they're looking at. So we find that is appreciated by business owners all the way through up to management teams, from a small business all the way up into the hundreds of millions. Everyone still seems to appreciate a high level at a glance view of their finances. And one of my favorite views in Dryrun is to flip over to the net cash view. Here's where you can see some of the months, ahead that may be a little bit underwater if you don't get the sales engine going. So it's a great way to visualize, even though you have cash in the bank, hey, there's going to be some months that are going to be slow if we don't stay on top of our sales.
Right.
As I expand this first scenario, you'll see that we split Dryrun into 3 sections by default: cash in, cash out, and recurring. So cash in is basically where your open invoices go, accounts receivable, but also all of the revenue transactions from the past, or our account data from the past, that we can use to get some insight on the past, budget to actuals, and also use it to forecast forward. And also cash in is a place where you can start to model out all sorts of inflows of cash, whether it's predicted revenue, loans, anything else. Cash out tends to be AP, where those big one-off bills that really cause a problem for your cash flow. And then recurring is very much kind of the fixed costs, payroll, rent, and all those sorts of things. So if I expand this first section, this cash in section, you'll see we've got all of our open invoices here. So there are other ways to forecast a Dryrun if you have a really high number of invoices or bills. Different ways to do sort of indirect forecasting, or even just like DSO, DPO based on client and vendor. There's ways that we can work with you on that. But commonly we see businesses with big bills and big invoices. And so here you can see these invoices are marked in red, and this is actually the overdue invoices. And the red number is how many days overdue. So it gives you a really good idea of what's happening in the business and who you have to follow up on. And anything that has a calendar badge, that's the due date. So when you expect to be paid, or, best case scenario, when you'll get paid.
Yeah.
From a cash management perspective, like this, we can actually just click on an item here. And let's say we talked with the client and they can't pay us till April. We can just bump that back with a quick calendar change. We'll flag that item in orange. So now okay, we've added an expected date. We got to kind of keep track of what's happening there.
Yeah.
Cash out, very similar. In this case, what I'm doing is I'm kind of mapping my COGS accounts here and forecasting. So anything that's in blue is a forecast. And in this case, we're mapping it to the previous year. So it's just a great way to pick up seasonality trends and kind of get started with your forecast. But there's a number of different ways to forecast in Dryrun. So you can use our auto forecast to also pick up the average of last year, or pick up the forecast from a recent month and just carry it forward, or turn it off and upload data from a spreadsheet, or even just enter your own automations right into Dryrun. So there's a lot of different ways you can forecast. So I'll just go back a month here. I'm just going to pop back into cash in. You'll see we have an account here in black. This is our actuals. So you'll notice in February, we don't have any accounts. That's because our fake bookkeeping isn't quite done yet. But
Okay.
we can, that happens a lot in business too. So you can
Yeah.
still use it. The data doesn't have to be right up to the minute to have really useful info, because primarily our open invoices and bills are right up to date. But any of these accounts in the past that are in black, and I can show you a little bit further back, are our actuals coming from our accounting file. And you'll see here that I can hover over this account and it gives us our budget to actuals as well. So I can do budget to actuals on an account level. I can go up to the section, which is cash in. Again, look at our forecast versus actual, or budget to actuals. And I can even turn on variance on the graph. And here's our forecast is the hatched line box. Anything that's solid is the actuals as it starts to come in. So if I go further back into the past, you can see, here we've got a green. We know we're above our budget. Here we're below budget. So it gives you a way to kind of measure that. And we can also do the same looking into our recurring file. In recurring, you can see we've got all of our actuals, and we've been tracking kind of what's going on month to month. If I jump forward to today, and I'll just turn off the variance for now. In recurring, you can see, again, all of these blue accounts are based on an auto forecast, but in this case, we just built it on a recent month. So we can kind of bucket these expenses if we want. So we can give as much detail as we want. We can hide accounts. We can pin to the top. We can color code. We can group all that sort of stuff so that you can kind of show exactly what you want in Dryrun. So that would be just like an initial scenario. Now, I also will mention a very common view in Dryrun is to jump to weekly. We also do have daily. That tends to be more for businesses that are in distress. But weekly is a great way to look at when these invoices are expected to land on a week-to-week basis. So it's a really popular view in Dryrun as well. I'm just going to go back to monthly and go to today. And now to show you a little bit of the capability of how you can model things out in Dryrun, I'm going to create a what-if scenario. So an easy way to create a what-if is just to simply duplicate the scenario that we've got. And now I can start adjusting things. So this also is a great way to show you how much flexibility you have in Dryrun. So even though we've imported data, we've got this set up in a minute or two, technically you could actually build everything you see manually in Dryrun, or a hybrid of anything from a little bit of manual control all the way through to all imported data. So here we know, like, oh, our books aren't done yet. So, hey, we're going to put in a more accurate month start value at the start of the month. And that's going to give us a little bit more accuracy. In this what if scenario for cash in, we're going to take a look at what if we took a $500,000 loan because we want to be able to buy some materials. Now, if I enter something like this into Dryrun, I can repeat it. In this case, I'm not going to, but I can get any repeat you can possibly think of under the sun. I can do start date, end dates. I can even do number of units. So all of those types of things to model things out. But in this case, I'm simply adding this single transaction. And you can see in Dryrun now, we've adjusted our month starts. So there's a little bit of a difference. And now we've got our two options and how much money we're going to have in the bank. And now I'll drop down to cash out and say, okay, what if we now bought materials the following month? And let's say we've got a little bit of wiggle room there. So I'm just going to say single transaction of 300,000. Again, I could repeat if I want and all that sort of thing. But now you can see on the graph, okay, we've got money coming in. It's going to go down. We've still left ourselves a lot of wiggle room. I can still flip to that net cash view. I can turn on variance for the two scenarios if I want. But I'll just go back to this cash end view. And so that's one way to kind of add these what if items into Dryrun. Another way to forecast and kind of get things moving really quickly is to just build on top of the auto forecast. So in this case, we've got our auto forecast based on a recent month. And let's say we looked at this account here, we clicked on it and said, I just want to bump this by 20%. You can simply bump it by 20%. It'll show the 20% adjustment, the result that we have here. And now we'll go down to this other account. And, even though we've forecast all of our recurring section with an auto forecast based on a recent month, I can actually go account by account and I can change it to give me exactly what happened in this month last year, or give me the average of last year, or turn off auto forecast. And a way to kind of decide what you want to do is to click on the graph, and I can see what happened over the past year. And I can see, okay, this is super consistent over the last 10 months, but I expect it's going to go up. So I'm going to change this to 140,000. And I'm also going to adjust this because this transaction, for whatever reason, lands on a specific day, and I want to be able to see it when I'm in weekly. So in this case, I'm going to say, hey, this lands on the last Thursday of every month. It's a really big transaction. And so now my office expenses here, it's up to 140,000. But also, if I go into weekly, I can see exactly what day that lands on. So that gives me a little bit more granularity. So I can leave things fairly ballpark if I want. I can get right down into the specifics if I want as well. And so now we have a couple of scenarios on the graph, and I can take a look at what's happening. But now I'm going to do just a quick data import, and I'll show you how to consolidate. And so let's say those two scenarios were actually two different locations instead of a what if, and I wanted to bring in data for a third location. So I can now just go to my import data, and I can even do a new connection to a completely different QBO file if I have a multi-entity business, D365, Business Central, Xero, Sage Intacct. I can upload from a spreadsheet. NetSuite's coming soon. In this case, I'll just go back to my QBO file because it's got kind of the most dummy data that we have to work with. So it's a good demo company. So I can filter by class. I can filter by location. I can select what bank account does this specific location run from, and I can still also get to other balance sheet items as well. Our income in cash in, I can decide, what would I like to have in my income section. I can turn on and off sections, and also I can map to that cash out section the different accounts that cause us problems because they have large one-off bills that we have to deal with. So in this case, I'm going to map all of our COGS accounts to our cash out, get to our auto forecast. Maybe I'll change from recent month for a recurring to just map to a yearly average. I can turn these off. I can switch the auto forecast method, whatever I'd like to do. But in this case, I'll just import this data. So now we have three scenarios on the graph. I can still, of course, flip to our net cash view. I can still turn on our variance and go back into the past. But a really common thing to do is to now consolidate. So from a collaboration perspective, I can share this forecast with other users, but I can also share individual scenarios with specific users at individual locations so that maybe they only see their slice of the data, but I can see all of it. And I just go into scenario functions. I can simply click on all of these, and you can merge it for more detail. I can actually get to other forecasts that people have shared with me. But in this case, all I'm going to do is consolidate these three locations. Now we've got our consolidated sort of roll up. We've got all three lines on the graph, and I can see this is how the business is doing overall. Here's how the individual locations are doing. And so now I can show, hide, change views, everything else. I can even get back into our setup, and I can start to move things around and adjust them and show and hide and just fine tune as much as I want. And finally, everybody always asks, well, can I export? So if you want to export, let's say you need to report to a bank or send this along somewhere, you can export the graph. But most importantly, what we hear all the time is you can export a spreadsheet. So I can export an Excel doc here and pick my date range, decide which scenarios. simply export, and I'll have a nicely formatted spreadsheet that I can adjust and get all ready and send along. And so that's just a real quick snapshot of Dryrun. We're very much focused on helping businesses that are working with near-term cash flow and sort of that midterm sales pipeline, and also just scenario modeling to test out those best case, worst case, likely case, all those sorts of things.
Cool. Okay. So on the screen, next to new scenario, it says CAD. So will
Yes.
this work with clients based in the US or QuickBooks files
Yes.
in the US? Okay.
Yeah, so
Um,
this is quite interesting. Like we're in Canadian up here, and so if I had actually brought in an account, let's say my QBO account was based in the United States or
yep.
anywhere, it
Yep.
would actually recognize that. It would set up my account in US dollars automatically.
Okay.
But I can actually override that and change it
Oh,
right
nice.
inside Dryrun as well. The other thing I can do is if I had brought in a file and it was actually in US dollars from a different location, it would recognize it and automatically set up a live currency conversion updated every 15 minutes. So yeah, it's a great question. We do handle those currency conversion issues really seamlessly, which works great for those multi-entity, multi-currency businesses.
Okay. I probably wrote this down wrong. In the beginning, you said something, and I think you said DSPO, but
Oh, DSO, so days outstanding, like day sales outstanding. So
got
basically,
it.
if you wanted to look at, let's say we had a lot of invoices or a lot of bills, and you wanted to sort of look at days outstanding for bills and invoices, and set that up on a sort of a repeating schedule, that would also, you'd be able to do that as well. Or if you had just if you aren't bringing in bills and invoices and you're just kind of looking at your revenue and doing predictions on that, then you can also do some forecasting that way, so that you can kind of ballpark it, do a little bit more of an indirect forecasting, like, hey, we think 70% of this AR will show up next month, 30% the following, or whatever you'd like to do.
Okay. This is great. I like that it's magic and it's also simple. I'm sure it's not simple behind the scenes, but to look at it does not feel intimidating, and that feels simple. Um, who like who's the ideal client or ideal business size? Like most of my clients
Yeah.
tend to be really, really small. But like who would a person know that they need a cash flow software, or if they don't know, then who might?
Yeah, so generally we see like the number one reason businesses come to us is from lumpy cash flow. Like that
Okay.
tends to be, big bills, big invoices. Now that can affect very small businesses all the way up to massive businesses. I will say that even though we have, small business all the way up to medium-sized businesses, um, we tend to see most often they're multi-million dollar businesses and up, just because of the complexity and the number of transactions, the dollars in and out cause those headaches. But yeah, there's no sort of hard and set rule. But when it starts to get complicated, with that ARAP, and you're doing a lot of scenario modeling, and you got those spreadsheets with 50 tabs in the bottom, that's usually when we see people come to us. But the other reasons that people come to us, not necessarily from sort of that really lumpy cash flow, but sometimes it's multi-entity. So even if you have relatively smooth cash flow, but you need to see what the business is doing overall with, maybe you have 3 entities, 5 entities, 25. We just talked with someone earlier today. Um, that's where we can also help when there's a lot of people touching these forecasts, and that we can definitely help with that as well. So, and the third place that we tend to see people coming to us is when they have a need to report. So, nonprofits, private equity owned businesses, where, their cash flow might not even be that volatile, but they have to report on a weekly basis or a monthly basis. We can help build those really fast, and also it's just a really simple visualization for whoever you're reporting to. So those are the 3 buckets we tend to see the most.
Okay. Uh yeah, I don't do personal bookkeeping, but I have friends who do. In in some of those cases, there'll be a household or a family with multiple trusts. So it kind of feels like what you're saying, like with multiple businesses, but rather than being businesses, it's trusts.
Mhm.
Um,
Yes.
if they're in QuickBooks, like if this is a value to them, could they use it?
Uh, the easy answer is yes. The
Okay.
long answer is it depends a little bit on how the file is set up, to be honest. But generally, it would be set up fairly straightforward with classes or whatever, so that we could do that.
Yeah.
And I should also mention that you don't have to connect files into Dryrun. I will say some of the largest businesses we work with
Yeah.
also have really complicated systems. They have multiple systems with data in it. And it's tricky to get it out, and it's not all always up to date. And so what happens is they grab some of the highlights and they enter it into Dryrun manually, and they use Dryrun completely manually just as a visualization tool for management. And so, yeah, you could, depending on the needs, you can go anywhere from it's kind of almost full auto imported data through to just modeling some key points so you can visualize it completely manually and everything in between as well.
This is great. I had a call with someone earlier today who has multiple entities, and we were talking about consolidating stuff. And I don't know if cash flow is a thing, but I'm very excited to share this video and be like, hey, after we spoke, I spoke to someone else, and maybe you should watch this video. So
Yeah,
yeah,
if it is a challenge, we would love to talk with them. Just to give you a bit of an idea of how people work with us. So,
yeah.
we tend to work primarily, like most often, with CFOs, either an internal CFO in their finance team or a fractional CFO offering services to multiple companies. And sometimes it's just also business owners. Now we do occasionally get that as well. And we have, if you're a fractional CFO and you're kind of helping a number of businesses, we have a partner plan, and there's all sorts of kind of wholesale rates associated with that. If you're an internal finance team, you can come and talk with us. In both cases, we offer a free trial, free training, and unless it's getting into sort of ERP and some really heavy implementation, it tends to also be free implementation. If not, we're also very concrete on what the pricing is, and so it's very, very clear pricing as well. So.
Okay. For people to sign up, do they just go to the website? If they have questions, do they go to the website? Like, uh, where do people go if they're like, that sounds cool, I want to learn more?
Yeah, if you'd like to learn more, just visit us at dryrun.com. We have a chat bubble right there. You can ask us questions right there. I would really encourage you, if you do have any interest in just learning a bit more about Dryrun, just book a quick demo right on the website there. And it's all free. We're happy to walk you through, spend a little time answering your questions, showing you Dryrun, and yeah, no strings attached. If you'd like to progress to a free trial, we can help you out there. And if not, we're here if or when you need us.
Awesome. This is great. Thank you. Like, I was curious, but I did need my own personal demo, but my own personal demo could also be recorded and shared on my YouTube channel so that other people can watch it and get a sense of it. So this is super great. Um, is there anything else that you want to say that we didn't cover?
I don't believe so, except that there's a lot of functionality that I skimmed right past. So if you're curious as, hey, can it do this or do that, just come and talk with us, and we'll let you know. But I really appreciate your time, Rachel. And also, I know this will be living on your YouTube channel likely for a long time. We do have a really aggressive roadmap as we develop Dryrun. And so we've always got some new functionality coming out. So please just come and check us out to see what the latest is with Dryrun as well.
Yeah, that sounds good. Yeah, we're recording this in March 2025. So yeah, if you watch the video later, likely things have changed.
Yeah.
Whew.
Yeah. All right. Well,
Yes.
thank you so much, Rachel. I,
Hmm.
I really appreciate the opportunity to talk with you, show you Dryrun, and to have you share it with some of your community. I really appreciate that.
Yeah, yeah, for sure. Thank you. Like I know it's weird to do demos like this, but I appreciate it.